My name is Joe Forensic. This is a quick update to all my investors and potential investors who are anxiously waiting on the sidelines ready to invest in precious metals. This update in the financial markets is very important as we have experienced serious movement in prices and fundamentals. If you have not watched my first video, I strongly suggest it as we lay down the building blocks as to why you should be buying precious metals. Let's jump right into it again and talk about the manipulation of silver and gold, which isn't really news to anyone, especially if you watched my first video. Deutsche Bank, we touched on this bank before. They are having serious financial trouble and now have reached settlements over allegations that it manipulated gold and silver prices. It's important to note that they did not admit to the manipulation, but have reached an undisclosed settlement amount. More importantly, they have agreed to help pursue other banks who conspired with them to manipulate prices. A Canadian-based company is suing these large banks for $1 billion over this fraud. And the most recent lawsuit in Canada is for any citizen who made a silver transaction between the beginning of 1999 to mid-2014. What does this mean for gold and silver prices? Well, it solidifies our conclusion that the prices we are paying today are not fair market value, which, believe it or not, is great for you and I because the true value of gold and silver is much, much higher. Huge news coming out of China. Remember in the last video I mentioned that China will be making big plays in the precious metals market? Well, here we go with more Chinese influence in the ever-changing markets. China, just this week, has launched the SGE, the Shanghai Gold Exchange. They plan on being a global price setter for gold and silver and will take aim at London and New York gold setting centers where gold and silver prices have been set for the last century. Most importantly, South China Morning Post is reporting that this will hopefully reduce the country's reliance on the US-based prices of the metal. I again see this as a growing threat to the US dollar, which we talked about quite a bit in the last video. On April the 11th, 12th, and 13th of 2016, the Federal Reserve and the President of the United States of America held an emergency meeting. Only one meeting was expected, but it was extended to 3 days. This is a very rare occurrence and cannot go unnoted, especially given the extreme volatility in the marketplace this year. There's no specifics on what was said, but it looks like to me that the government is becoming increasingly worried as Hillary Clinton must win this next election. Again, this is a topic we touched on in the last video. During these emergency meetings, investors bought large amounts of gold eagles. This is an obvious reaction to expect from investors when an emergency meeting is called where it is highly speculated that behind the scenes all is not well in America and around the globe. Remember I said before that when investors are scared and uncertain of their future, they invest in wealth preservers, precious metals, gold and silver. From April the 11th to the 15th, we experienced almost the same amount of demand as the entire month of March. Now this is a wild card that I really wanted to include. It is too big of a topic to dive deep into right now, but needs to be mentioned. The 9/11 Commission report was made to explain the September 11th attacks. 28 pages of that report are being kept from the public due to public safety, according to the US government. It is highly speculated that in those 28 pages, Saudi Arabia is implicated in the 9/11 attacks. And to be clear, 15 of the 19 hijackers on September the 11th, 2001 were from Saudi Arabia. There is now a bill that Congress will vote on regarding the release of these 28 pages. The Saudi government is threatening to liquidate its $750 billion worth of US assets if the vote is passed. So why does this affect gold and silver? Well, this large sell-off of US assets that Saudi Arabia has threatened could help cause a financial crisis. And remember, during financial crises, gold and silver thrive. Saudi Arabia is the third biggest owner of US assets and one of its strongest allies. If their threat was made real, it would affect the US greatly. In my opinion, I don't expect we will see the 28 pages anytime soon, especially since the Obama administration is trying to block the bill's passage. This is why I want to get out this update to investors as soon as possible, as we've experienced a quick and big increase in silver prices over the last 2 weeks. A lot of this could have to do with the SGE. Remember earlier we were talking about the Shanghai Gold Exchange. Let's zoom out here to get a more broad picture. Notice on the far right the current prices for silver. We have made significant increase and are now breaking the psychological level of $17 per ounce. The far left-hand side is the beginning of 2016 as indicated by the yellow line. Also take note of the inverse head and shoulders pattern in the middle as indicated by this circular shape. Again, this is pointing to more increases in the prices of silver. Let's go to the daily time frame for it gives us an even bigger picture of silver prices. I have labeled here a great technical pattern that indicates higher prices. It is what a technical trader calls a bullish flag. This is the pole here at the beginning of 2016 as prices moved higher. It then moved into this trading range where prices bounced around in this blue box, and we have now broken the top side of this bullish flag. Also notice that volume has broken its descending trend line at the exact same time this bullish flag broke to the upside. Now let's move on to the weekly time frame. Silver was moving in a multi-year descending channel as indicated in purple. We have now broken out of this channel and have formed an inverse head and shoulders pattern. That could indicate that silver has found its lowest prices. I want to point out the head and shoulders pattern that was formed at the beginning of 2015. This would indicate more losses in silver prices, but now prices and fundamentals have changed and prices are finding support. I expect that we will touch the highs around 1850 where we should find resistance and where I expect will be the absolute last opportunity to buy silver. Once it breaks and closes above 1850, prices could go sky high. Let's move on to gold now. Although I prefer silver, gold should be moving in the same direction as silver as they are both important in determining if investors are fearful and avoiding risk. This is gold on a 4-hour time frame. Gold has been moving in a tight range the last couple weeks, and it was leading silver to begin 2016, but has now taken a back seat to silver, which is what we will discuss when looking at the gold to silver ratio. Again, the yellow line on the far left hand indicates the beginning of 2016. Gold moved up greatly and formed a nice technical pattern. A pennant was formed, as indicated by the triangle pattern, where it made lower highs and higher lows. This is where consolidation was happening, and I expected it to break higher. It failed to do so immediately, but then formed a tight descending channel, which we now have broken and can expect more ranging and gains. Let's take a quick look at gold on the daily time frame. Like I said in the last video, gold prices have moved up and based on candlestick math have formed a bullish hammer. The weekly time frame shows that we have broken out of the multi-year descending channel as indicated by this orange box and can expect more increases in price. Let's jump over to the gold to silver ratio as it has become my favorite chart for concluding that silver will outperform gold moving forward. So a quick recap, the gold to silver ratio tells us how many ounces of silver we can buy with 1 ounce of gold. We went quite in depth with this last video, but we need to revisit it because last week we made a significant move, and again we are going much lower this week. Last week, silver outperformed gold drastically. The gold to silver ratio moved from 81 to 76 in just 5 days, and that's exactly what we want to see. I wanted to know when was the last time we saw a bearish movement this big. It could let us know what may happen in the future. So I took my measurement tool and I determined that the last time we had a movement this big was here in late 2008 and again early 2009. What preceded was an extremely strong multi-year silver push. Remember that when prices move down, that means that silver is outperforming gold. I also want to know when was the last time we saw the same size of movement in the opposite direction. It happened here in the middle and late part of 2011 as indicated by these arrows. This led to a multi-year bullish move for gold in contrast to silver. Let's zoom out here and get a look at this ascending trend line. This ascending trend line, as indicated by this yellow line, prices have bounced off of it for many years, but now look where we are. We might be breaking this trend line right now. I might be early to call a change in direction, but based on the past, that's exactly what it looks like. I will be 100% convinced when we break below 68. I bet that break of 68 will coincide with the break of $18.50 per ounce for silver. Maybe the best indicator of risk appetite is the S&P 500. I think it gives us a great view of traders' mindsets. Currently, the S&P 500 looks like it's on shaky ground. This is the same chart I showed in my last video. The circle at the far right is indicating the head and shoulders pattern that points to more losses. Once we break the neckline around the 1800 mark, we will experience more losses. Currently though, the S&P 500 has bounced higher, but when we dig deep into the price and volume, it clearly does not make any sense. Let's drop down to the weekly time frame so you can visualize what I am talking about. In a healthy trend, we should expect increasing volume, but that is not what is happening. Look at how our recent prices have moved upwards on decreasing volume. It makes no sense. Let's back up here a little bit to look at the Great Recovery of 2008. As prices increased here, volume either stayed steady or increased, which makes perfect sense. However, currently prices are increasing on lower volume. Take a look at what happened the last two times prices increased on decreasing volume. Here in late 2014 to mid 2015, prices moved up while volume dwindled. Prices then crashed in August. Again here, late in 2015, prices increased while volume decreased. What followed was a sharp turn lower in prices, which I covered heavily in the last video. This is exactly what is happening now. Prices are moving upwards on decreasing volume. I do think that this market, the S&P 500, will stay afloat for a little while longer. It could break its strong resistance at 2140, but it is not sustainable and will eventually go much lower. Remember, it is not a question of if, it is a question of when. In conclusion, silver is looking better and better each day, while the economy that surrounds us is looking worse off. Remember, in the last video, we determined a recession is upon us through mathematics and based on what big banks and experts are saying. Negative interest rates. I am still sticking to my prediction that the United States will not raise interest rates, and if they do, it could cause a big problem worldwide. In just this update though, we discussed the role that big banks have played in the manipulation over gold and silver, and because of this, we are able to pay well below fair market value for silver and gold. Nobody knows the true value of silver, but it is definitely much higher than what the markets say. The SGE, the Shanghai Gold Exchange, which just started this week, is competing with New York and London gold setting centers, which may be the reason to the incredible price movements this week. The emergency meeting between Barack Obama and the Federal Reserve, where we do not know what was specifically said. This fear caused investors to buy a large amount of precious metals, which is an obvious reaction when investors are fearful and uncertain of their future. The threats that Saudi Arabia has made to the United States that could cause an economic and diplomatic issue. And finally, the massive moves in silver and the gold to silver ratio, which could be pointing to the beginning of silver's strength for the foreseeable future. If you haven't checked out my original video on investing in precious metals, gold and silver, I highly suggest it. My name is Joe Forensic. That is my contact information. That is what I can do for you. Thank you so much for your time.